Hey everyone, it's Matt Donahue with your weekly market update. Today is Monday, March 24th. Let's go ahead and jump into it. Um, there's a lot going on last week, so let's just start with our week in review. So in the past week, the housing market showed some significant cooling, with housing starts dropping 9.8% month over month. Meanwhile, initial jobless claims ticked up to over 219,000. That's a sign that the labor market might also be cooling. On the economic activity front, the flash manufacturing PMI came in at 51.6. That indicates expansion, albeit a modest expansion. And services PMI dipped to 49.7, suggesting a slight contraction. So those numbers highlight the mixed economic landscape that we're dealing with right now. Looking ahead, we've got some reports this week. The housing price index and new home sales are both going to come out. Those are used for gauging the strength of the real estate market. Additionally, we'll get the second estimate, I should say, of Q4 2024 GDP, which could provide more clarity on economic growth as we enter the second quarter of 2025. Thought of the week, economic thought of the week, market thought of the week. The gold rush continues. Gold has just been on a tear, up 12% year to date. It's nearing $3,000 per troy ounce. That follows a very impressive 25.3% gain in 2024, which even outpaced the S&P 500. So what's driving this rally? Well, demand hasn't changed significantly over the past 5 years, but central banks have emerged as the dominant buyers. Since 2019, they have increased purchases by 11.5% annually, largely to diversify reserves after geopolitical shifts, such as the freezing of Russians' foreign assets in 2022. For individual investors, though, gold is a controversial asset. While it does serve as a crisis hedge, it doesn't generate yield. That makes it a costly hold in today's high interest rate environment. If diversification is your goal, alternatives like transportation, infrastructure, those may offer a better risk adjusted return. Philosophy quote of the week. Hey, our mindset shapes how we experience life. And this week's quote comes from the Stoic philosopher Epictetus. And he says, "It isn't the one who has it in for you and takes a swipe that harms you, but rather the harm comes from your own belief about the abuse." He reminds us that external events only affect us if we allow them to. Whether it's market volatility, criticism, an unexpected challenge, maybe a poorly worded email or text message you receive from someone, your reaction to it determines the impact. So you have to master your responses, right? And that's something that all of us, including me, can probably do a lot better at. Tax tips. It's not all about income tax, folks. Today we're going to talk about property taxes. As we roll into March, many property owners are going to start getting their annual property tax valuation notices. Now, you got to remember, these assessments typically run about 18 months behind current market values, but they are going to determine what you owe in local property taxes. If you think your valuation is inaccurate, you want to consider appealing. You might have grounds if the full cash value seems high compared to the market, the county has incorrect square footage listed for your property, and comparable home sales used in the assessment are not truly representative. You have 60 days from the notice date to file an appeal, so don't stick it in your desk drawer at home or whatever and forget about it, because there is a clock if you want to do it. Wrapping up, this will be our last weekly update this year where we talk about the financial fitness checkup, but it is still a great time to assess your financial fitness. Have your goals changed? Are you preparing for a major purchase? College tuition, maybe a business expansion. Some key areas to review include cash flow planning. Are you really optimizing your savings and your spending? Your investment strategy, does your portfolio reflect your goals and what's going on in the market around you? What's going on in the world around you? Estate planning, folks. I am at a point in my life where everybody needs to have an estate plan. You need to have a will, a trust, a medical directive, a power of attorney. You need to have all that stuff ready to go, because you just don't know when something's going to happen. You also need to make sure that your contingent beneficiaries and the executive of your estate are trust companies or banks, because they're held to a fiduciary standard. They know what to do. They know how to wrap that stuff up. If you want to know more about that, give us a call. But that wraps up this week's market recap. If you'd like to connect with either Jason, Ken, or me on the team, let us know. You can always visit our website, missionfinancialplanners.com, or call us at 800 888-339-0093. Once again, 888-339-0093. Thanks for tuning in. We'll see you next week for another Financial Insights update. Stay smart, stay informed, and stay financially fit. Thanks, everyone.